In this quiz, you're going to be given some full year financial scenarios, and the first two questions are going to be based off yearly tax deductions and expenses, and then the last three questions are going to be based off yearly investment gains. So I'm going to show you one example of each and what to do for these questions. So let's first look at the first one, yearly tax deductions and expenses. So you're going to be given a similar scenario, obviously different name and different numbers, but it's essentially going to be the same question. So this past year, Brandon made $62,300. All taxes deducted from his salary totaled up to be 31% of his income. His expenses, which is the money he spent on the year, totaled to be $41,700. How much money did Brandon save this past year? And that's what you're going to be looking to answer. So to do that, first you're going to have to find the money he made after taxes. And then once you find that, you're going to subtract whatever his yearly expenses were, and that's going to give you either if he had his money saved or lost for the year. So let's go ahead and see how to do that. So money made after taxes, so you see he made $62,300 on the year, but you have to do it after you take out his taxes. So you're going to multiply that by 1 minus the tax percentage that has been taken, and you can see that 31% of his income has been deducted for taxes. So remember how we do this. So 31, we want to get that to a multiple. So 31 divided by 100 is going to give us a multiplier of 0.31. And that is what you're going to subtract 1 from. So you're going to put 1 minus that number right there. And now you can go ahead and make this calculation. So 62,300 times 1 minus 0.31, which is his taxes deducted, is going to be 0.69. And again, if that number is confusing, like why it is that way, that 69, the 0.69 represents 69% of the money in his bank after the 31% has been deducted for taxes. So once you do that, 62,300 times 0.69 is going to give you $42,987 left over. And so that is going to be how much money he made after taxes. So now we just need to figure out what his yearly expenses are, and we're going to subtract that from 42,987. So you can see there his yearly expenses totaled up to be $41,700. So we can just type that in right there, 41,700. So you subtract that, and that's going to give you $1,287 saved at the end of the year. So we're going to move on to the second type of question you're going to encounter, and that's going to be ones about yearly investment gains. So again, the names and numbers will be different, but it's essentially you're going to be doing the same type of question. So let's look at this one. Paula has her money in 3 different accounts at different rates. Her first has $7,200, gaining APY of 4.75%. Second account has guaranteed APY of 5.3% and holds $5,700. Her savings account, which has $9,750, holds an interest rate of only 0.52%. Again, most savings accounts that are just regular savings accounts have very, very small interest rates. And at the end of the year, what is the total of all of her accounts added up? So you're just going to find account 1 after the yearly gains, add it to account 2 after the yearly gains, add it to account 3 after the yearly gains. So you just got to find what the yearly gains are and add them up. So let's start with account 1. Holds 7,200, APY of 4.5%. So you're going to multiply 7,200 times 1 plus the API. And again, we got to find that APY multiplier first. So you're going to go 4.75 divided by 100, and that's going to give you 0.0475. And you're going to add that number to 1 to get your whole account multiplier. So you got 7,200 times 1.0475. That's going to give you $7,542 at the end of the year after the yearly gains have been added. So account 2 has 5,700 in it and APY of 5.3%. So you're going to do the same thing. You got to divide 5.3 divided by 100. That's going to give you 0.053, and you're going to add that to 1. So now you're just going to go 5,700 times 1.053. So that's going to give you $6,202. So this account grew by a little over $500 after the yearly gains have been tallied up. Now just same thing for account 3. So it has $9,750 in it and interest rate of only 0.52%. So you can do the same thing. This is an error that some people might make, is because you're going to go 0.52 divided by 100, not 5.2. And that's going to give you 0.0052. And because the interest rate is less than 1%, there will be 2 zeros on the APY multiplier and not 1, because it's 0.52%, not 5.2%. So it's going to be very little extra interest gained here. So now you're going to add that to 1, the 0.0052. So you're going to have 9750 times 1.0052, which is going to give you very little extra interest. So this account is at $9,801. So it only grew about $51 for the year. Now you have everything you need, so you can just add up account 1 plus account 2 plus account 3, and that's going to give you a full year total of $23,545. So that's how you do these full year financial scenarios. Take it easy.